Lululemon stock is down 50% in the past 6 months and the market is panicking about slowing growth. But what if the market is making a huge mistake? And what if this is a generational opportunity in disguise? I'm Mehdi from Tokyo Alpha Mind, and in this video we are going to deep dive into Lululemon, ticker symbol LULU, and see if this is a recoverable position in your portfolio. So let's get started. Lululemon, I think that most of you know about the brand and about the business. So Lululemon is a sportswear company and more specifically known for its yoga sportswear line. So this brand has been growing very fast in the past few years and has become kind of a landmark name in the space. So Lululemon also represents all the yoga pants and all this fashion attire that a lot of people are wearing to do sports. But it's not just that, and what we are going to see is that Lululemon has been able to grow this business based on 3 core pillars. So the first pillar is about direct to consumer. Yes, so Lululemon actually has been able to grow its business by going directly to the customers, meaning with their directly operated shop. And so this links to the second pillar, which is about creating a community. So Lululemon has been very great to actually build communities around these products and actually cooperating with ambassadors, as they say, so with yoga instructors, so with other athletes, to really develop the brand and make a lot of different people associate the brand with a kind of new lifestyle. So Lululemon is actually kind of a lifestyle brand for a lot of people, and it has been targeted a lot of affluent customers who really are trying to actually find a healthier lifestyle, I would say. And the third pillar is actually about product innovation. So yes, Lululemon is not just marketing and not just creating a brand. So Lululemon is very good also at research and development. And that's why a lot of people love this brand, because their product is actually very high quality and has a lot of different features for athletes and yoga practitioners. So that's why that with this type of product innovation, and especially in terms of fabrics, that a lot of people really like the brand and are kind of repeating buying at the brand. So you can see that these 3 pillars have been actually very synergetic, meaning that they are all working together. And so that's why Lululemon has been able to grow tremendously from 2021 to now 2025. So we've seen 40%, 50% growth, a little bit slowing down in the past year, and we are going to go back on that. But the growth in the past 5 years has been tremendous, and their strategic plan, so Power of 3 times 2, has actually been able to really start to deliver in terms of growth. So what is this strategic plan that for Lululemon? So Power of 3 times 2. So it's basically trying to reach by 2026 $12.5 billion of revenue, and basically based on 3 main axes. So the first axis is to develop internationally, so quadruple the business in terms of international expansion, so meaning going beyond North America, where the main business is today for Lululemon, and to go into Europe, to go into Asia, and more specifically in China, where they are not really developed. And the second pillar is to actually grow beyond the female attire part or the female fashion, and to grow into the male's business as well. I think, and from a lot of different opinions that I've gathered around me, so this is actually quite successful, and a lot of male also really like the brand, and a lot of men are really finding these clothes is very practical and very useful, even in a business environment. And the third pillar is also to double their digital business or their e-commerce business by also enhancing their marketing and digital marketing strategies with AI, for example. So we've seen that Lululemon has actually a great formula, and this applied in the past 5 years has actually shown tremendous business result, and this translated into a huge stock price increase in the past few years. But as you notice that the stock price actually got cut in half in the past 6 months. So what really happened for Lululemon, and why it actually came from this kind of darling in terms of clothes and in terms of fashion to a stock which actually has a lot of pessimism and a lot of fear behind it. What happened to Lululemon? So have you seen that the stock has declined by 50% since the beginning of the year? And one of the key reasons why the stock has declined minus 50% since the beginning of the year is actually from 2 factors. The first one is sales growth deceleration, and the second one is margin compression. So the first one about sales growth deceleration is actually kind of an industry-wide problem that we have seen in North America, most especially with companies like Nike, for example, or other competitors of Lululemon. But still, as we've seen, so like in fiscal 25, so we've seen that like Lululemon actually grew only by 10% when the market was expecting much more and was used to growth of like 20 or 30% before. And especially in North America, so what we've seen is that growth actually came out flat, and that's why this spooked a lot of different investors. Indeed, one of the key reasons that we have seen also like growth decelerate a little bit is also because of inflation. So the consumer is maybe not as confident in buying items like Lululemon, but we've seen also that in the luxury segment, as we've seen deceleration in terms of growth, and we've seen that also like with companies like Nike's, as we said. So this is like kind of an industry-wide problem, but Lululemon also suffers very much from that. And given the expectation that were actually behind Lululemon, the fact that it was actually an incredible brand that were expected to grow much more, so the decline actually came from that. And the second factor is about margin compression, as we say. So why margin compression? So first, in order to sustain the growth and try to support the growth that they were expected, so a lot of expenses has been actually done to support this growth from Lululemon. On top of that, so based on their strategic plan, so to develop new clothes for men, to expand internationally, and also to expand on the digital side. So a lot of expenses is needed to actually grow on these different segments. So that's why overall, so the margins for Lululemon, which were actually incredible, very good before, actually started to compress, and this gave a lot of anxiety from different investors. And so definitely this explains also why Lululemon has declined so much. On top of these two factors, actually, there's kind of a change in the market. So we've seen that with a lot of companies like LVMH, for example, where the market were overpricing and overvaluing these type of companies, where the brand was actually believed to be so strong that the growth would actually continue normally, and inflation and price increase could actually be absorbed by the consumer. But the reality turned out to be different for a lot of different companies like LVMH, but also like for Lululemon. So we've seen difficulties to actually grow as consumers became more and more reluctant to actually buy these products at much higher prices. And so that's why brands definitely in the market were seen not as a good investment as what it could be before. And so that actually brought a lot of different multiples for this type of companies down, as we've seen with Lululemon. So after the decline of more than 50%, so Lululemon is today a company valued at around 23 billion in terms of market cap. And actually, like the valuation actually come down so much that it became quite attractive. So what we are seeing is that a price-to-earning ratio of 2.6 on the trailing 12 months, and on the forward PE ratio, so 2.7, so very similar. And in terms of EV to sales, so around like 2, and in terms of EV to EBITDA, around 8, and in terms of price to free cash flow over the next 12 months, so we are seeing something around 15. So as you can see, so the multiples, they have compressed so much that today the valuation has become very compelling. And definitely, I think that this is something that a lot of investors are looking at today, and that's what makes Lululemon quite an attractive investment for a lot of different people. And looking also at the different returns, well, so these are historical ones, so always try to be careful with that. But in terms of return on equity, for example, 38%, return on invested capital, 35%. And in terms of margin, so we saw like gross margin for Lululemon of around 60%. So that's the kind of thing that we are seeing with companies like LVMH. So on the luxury side, for example, so very good, definitely. In terms of net margin, so around 17%, and operating margin around 23%. So that really shows that Lululemon actually was a very profitable company, and is still actually quite profitable, even with some margin compression. Okay, so what's the investment case and the investment thesis for Lululemon? So we've seen that Lululemon actually came from being kind of an angel stock with a very high valuation and very high expectation in terms of growth going forward, and also given being a very profitable company, to actually having come down minus 50% in the last 6 months and came to very attractive valuation multiple. So as we've seen, like P multiple around 13. So this is actually great. So that's why a lot of people are actually interested in Lululemon. We can also like foresee that they are still going to grow a little bit because the brand is still attractive. But the reality is also that growth is going to be very difficult, at least so in my opinion, and this is not financial advice, but what I'm seeing is that, well, first, there is a lot of competition from all the brands. So we've seen with like Alo, for example, or like Vuori. So there's a lot of competition in the field, even though that Lululemon still like retains its appeal for a lot of demographics. So there's still a lot of competition, especially on the yoga side. And as well, so we've seen that consumer is maybe today a little bit reluctant to actually purchase more and more of these items, which actually reach kind of a level of low entry luxury, we would say. But definitely, so growth is going to become very difficult in mature market like North America. In China, this is something that Lululemon still has to crack. And a lot of companies relying on China actually are not performing very well today. So definitely here also is going to be difficult for Lululemon to continue to grow. So my takeaway from all of that and from this Lululemon analysis is that, yes, indeed, the valuation is quite attractive, especially compared to historical figures. But the reality is that the business of Lululemon has kind of changed. And so you have to take that into consideration. Going forward, Lululemon is not going to grow as fast as in the past. And so this will lead to much more compressed valuation multiples. And so today we are at a P of around 13, for example, price to free cash flow around 15. But I don't think that we are going to get back to the multiple that we had before. And we can actually realize that a P of 15 or price to free cash flow of 20 for I would say mature business like Lululemon could be actually warranted in some ways. So that's why I think that maybe at $200 today, the stock is a bit undervalued, but I don't really see like a comeback to the 400s very soon. So that's why be careful with this investment. I think that Lululemon is not in a very recoverable position. Definitely return to all-time high is going to take a lot of time and it's going to take years because growth is not going to come back very quick for Lululemon. So if you're interested in another analysis like this one, please check my other videos. Please like, please subscribe, and I see you in another one. Bye.